Good morning, traders. Chris Bus here with Traders Profit Compass with your morning look at markets for Wednesday, June 2nd. Okay, let's take a quick look at futures. I think just for the sake of time, I can sum the whole thing up that everything is flat except oil, which is up 1%. Looking at car sales, ADP employment, red book, and beige book on the macro front today. And just as a point to note, the oil inventories have been delayed a day because of the Monday holiday. So if you're into the natural gas report and the oil inventory report, just push those out a day, and we'll get those tomorrow. Okay, just revisiting our oscillators. Here we've got the Nasdaq Mcclellan oscillator. We're up to 48, and you'll recall that 60 is getting to the level where being long is the point of diminishing returns as far as risk reward goes, because you're getting to the overbought level, and above 60 is a place where you typically get a down cycle. That doesn't mean it's got to come all the way back down to oversold. All it means is if you've been long the whole time and now we get up into the 60s, it'd be time to be peeling off those positions and at least getting more neutral on your QQQ holdings. If we jump over to NYMO, which is the New York Oscillator, it's not as high. It's only at 38, so we've got a ways to go on that one. But you remember just a couple days ago we were at 0, so we've definitely made a decent advance. So now we've got to bring these oscillators into more frequent focus as we get near the top of the range. I also want to point out the VIX. We had a bottom here back in April, and then we had that rip up to 29 on the VIX, and that coincided with the big sell-off in Bitcoin. So now we've come all the way back down and back tested this prior low. But I want to point out that we've got bullish divergences intact. What does that mean? It means at the second low, our indicators are at higher levels. You'd expect it to be at the same level on the indicators. So what this is saying is there's a good chance that VIX is going to move north from here. It doesn't have to, but the indicator's saying there's a bullish divergence, and so that puts more odds in the favor of making a move higher. So today and then going forward, keep VIX in focus, because we're just below 18. A move above and close above 18 today opens the door to 20, and then of course you break out from 20, you're going up pretty fast, most likely. So we've got two elements. We just looked at the oscillators that are working up towards the top of the range, and now we've got the VIX that has made a double bottom with bullish divergence and is knocking at the door of first resistance at 18. So another reason to keep it in focus as far as watching equity prices, because the odds of a rollover or a pullback are gently increasing. I mean, they're not, I don't think it's imminent, but these two indicators point to softness. Let's just put it that way. Let's look at the dollar. This is the weekly chart of UUP. This is a tradable ETF following dollar futures. You can see we had the big ramp, and then we've come back down, made a bottom, dead cat bounce, back to the prior low. I've got a trend line off of the low back in 2018, and now we've broken that low, or broken that trend line, and are sitting on support. So we need to keep the dollar in focus, especially those in the commodity trades. You see a dollar breakdown here. That's going to be fuel to the fire for precious metals and the commodity complex for sure. Now, I do want to point out that just like the VIX, we've got bullish divergence at this low. So we've got to be on guard for the following. Number one, that this bottom holds, and then it bounces from here, recaptures the trend line, and moves back up. That would be a headwind for the precious metals and the commodity complex. Another scenario is a big head fake move. Come down below 24, get a bunch of shorts to pile in, get a bunch of long people to exit their position, come down here and have it be a head fake, and then they rip it the other way. That's a possibility that we've got to watch out for. And then the third scenario is that it breaks down and never looks back, because you can see there's really no technical support till we get down here in the 2250 range. And it doesn't sound like a lot, but that's 10%, and 10% on a currency is a big move. So we're at a critical spot on the dollar, and what we may see is just some sideways action until the Fed meeting in a few weeks, where they may come out with more policy statements, etc., looking ahead to taper, or we're doing nothing, or whatever they might say. There may be a hesitation here until that FOMC meeting passes, and then traders will take a more firm view on whether they want to bounce it or fail this key support level. So the dollar's at a critical spot. Just checking in on Ethereum is holding near those lows of last week, down here at 40, and Bitcoin was rejected on this bounce up to the 200, and has fallen back down below this 30 level. So the door is open now on Bitcoin for lower. The bulls have really got to step in here and, number one, recapture 30. Number two, they've got to recapture this 200 EMA, and to get Bitcoin on more solid footing, to say, okay, we had the 50% haircut, we had the Fibonacci pullback of halfway back of the advance, and now we're ready to reaccelerate higher. But like I said, a lot of work to be done, because now all the moving averages are bearishly stacked, 8 below the 20, which is below the 50, and we've got the 200 that is starting to curl down here in the 33 area. So bulls have got to step in right here, and if not, the door is open, could come all the way back in here to 23, and of course that would be the talk of the town in the crypto space. And it remains to be seen, is that going to be a big risk off move in general, bleeding into equities, or is the crypto stuff just going to be its own thing and have further correction to go before they can turn it around? So not a lot happening on the indexes yesterday. So there's not a lot of changes to the pivot points, but let's blow through these quickly. Had a big gap open yesterday, came up to this 422.50, almost 423 area, and then they just faded it the rest of the day, almost closing on the lows. So today for SPY, I still think 420 is your pivot. If price can recapture 420, then I think you can be long looking for 421.50 and higher. But as long as it stays below, I think it's vulnerable to come back in this 418 area and possibly back to this $2 gap that starts at 417. And here it is on the 30-minute chart. We came back after the rejection here at 422.50, came back and filled this gap here down to 419.25. Then they bounced a little bit and then rolled over into the close. Qs, again, nothing day. Had a gap open. Then they faded it, closing down, not all the way towards the lows, but certainly in the lower half of where price was during the day. You can see it clearly here. That reach up into 336 was rejected. Then you got a fast move down to the bottom of this trading range. So for today, right here in the middle of the range, like I always say, not a great place to try an entry. If you get a move into 322, and that's where I looked pre-market, it's bouncing along right at 322. It's got to hold. It's just as clear as can be. That's got to hold, or else price would be vulnerable to come back to this 330 as a first level, and then possibly back into 329, where this gap is that extends down to 327. On the bullish side of the equation, if we can break back above 334 and hold it, then the door is open for a move back to 336. But Qs have been really, really weak. And, just as a review of our technical analysis principles, we had this move right above 336. And then if you got that, if you said, okay, we're at the top of the range at resistance, get short, that's great. Kudos to you if you grabbed it. But the real sell signal was on this break of 334.25 or even 334 back into this prior trading range. And remember what we say, once you leave a trading range, it's not good to come back into it, or else the target is the bottom of the box. And that's exactly what happened, and it happened quickly. False move, back into the box, bottom of the box, just that fast. And then it held on that 332 level, which it had to do. But always keep that in mind. Doesn't matter what the time frame is. It can be on a 5-minute chart. It can be on a weekly chart. Doesn't matter. Once you break out of a range, you don't want to come back into that range, or else you can see a very fast move going the other way. IWM was strong yesterday. I failed to move this pivot point, so let's look at it on the 30-minute chart where I have it correct. Opened higher, came back, almost filled that opening gap down to 226, and then they went the other way for the rest of the day. I think today you move up your pivot to 227.75, 228 area. If you were long anywhere in here, I think it's a good idea to ratchet up your strikes or your stops, both, and then we can look for 229 as a first stop And you can look back on the, let's look here. Yeah, 229, then 231.50 is what I have for upside targets on IWM. So before we get into FATMAAN really quickly, if you're new to the channel, please hit the subscribe button and the alarm bell. That way you'll get all my content going forward. I think if you use the levels that I lay out, I'd like to think that your trading will drastically improve, giving you the opportunity to work on your execution rather than spending all your time trying to figure out the levels. I think you can trust my levels and then focus your attention on execution, and you'll get a lot better in your trading. And of course, longtime listeners, thanks for being here. Please pass the link along to people in your trading circle on Facebook, on Twitter, repost the links, etc. I'd really appreciate the help. So more or less a soggy day on FATMAAN across the board. Yesterday we talked about 330 being a pivot, and we lost that move, or lost that level, and came right back to 326.25. And we talked about that being a level where you could get long, and if you did that, it's good for about $4. So today, no changes. 330 is your pivot. Above, I think you can look for 333, and below, I think you can look back to 326.25, where you really want to see that hold, or you could lose a couple extra bucks down here to 324. Apple, really weak. Nothing going on here. Just oscillating here at 124.50. So I think that 124.50, 124.75 is a good pivot level. For, above you can be long and look for 126.50, but below I still think it can be vulnerable down to 122.5. And I wanted to show you the daily chart on this. Got this uptrend line, the one we were looking at last week, but now we've broken below it again, with 124 being a support level on the daily. You break below 124, then the door would certainly be open for a move down to 120 to test the 200-day. And there you have a big volume over price support bar that should hold at least on the initial move. So I think if you do get that move and you do get short 124 and you get a fast move down to 120, I would cover that position right away. I wouldn't look for a lot more at that juncture, because I think the first tag of the 200, I'm sure bulls will want to step in there and at the very least bounce it. And you can either try to participate in that bounce by reversing long, or if you just want to wait for the bounce to play out and then recycle your shorts, there's a much higher probability that if this bounces and then starts to roll over, that the 200 could break on the second run at it versus the first one. So just some ideas on Apple if it continues to remain weak. Tesla, nothing day. I still think your pivot 625. Above that, you can look for 640. And below that, I think it is vulnerable to come in here to 610 and possibly all the way back to 595 if things start getting really soggy. But I think the bulls are still in control here, and there's no reason to, if you're long, there's no particular immediate reason to bail out, in my opinion. But you should have your stops moved up to like this 618, 617.50 area. If you break much below that, you're going to have some room to run to the downside, and you don't want to see all your profits evaporate. So make sure you've got Tesla on a tight leash if you're long, and see if you can get a run into 640, where we've already seen one time that there was resistance at that level. Microsoft, junk day, down 1%. Had a move up to test the top of this trading range. And then when you lost that trading range, that was your sell signal. And look at how fast that move was, from 250 down to 247.5. And now we've got this flat flag structure with price closing on the lows and sitting on this gap from 247.50 down to 245. If you see 247.50 break, I think you get short there with a stop just above, and then look for a move down to 245, which was, remember, on the daily chart, that big pivot level. So larger picture, the bulls are okay as long as price is above 245, big picture. Technical or tactical picture is below 247.50. You want to get short and try to play for that 250 move down to key support. On the upside, if you see 247.50 holding and it looks like the market wants to go up, you can get a tactical long there with a stop just below, and then look for 248.50 and then a move back to 250. But I'll say this, tech has been really weak. So I think it actually favors this gap fill versus rocketing back up to 252. Amazon, no changes. There was a lot of intraday movement yesterday, but at the end of the day, nothing happened. Price stayed within 32.50 and the top of this gap down here at 32.10. So as long as it's moving within this tight band, I don't think there's much you can do. You've got to wait to try to get an entry around 32.50 or down here at 3200. Those of you that are actively trading it, yesterday you did get the shorting op at a test of 32.50 that failed, and then you got a fast $40 move the other way. So if you were on top of that and trading it, you did have the perfect chance on the open when it gapped higher, got to 32.50 and then was rejected. Google, touch of 23.90, back down to the bottom of the box, 23.55, and then they bounced it into the close. So there was a lot of movement there as well. But at the end of the day, no changes. Bulls are looking for a breakout above 23.90, where they can look for 2400 and then 2430 on the top. Bears just want to keep it in this range for now, and then eventually they want to see this 23.55 go and then bring it back down to this 23.30 level. So you've got a pretty clear pivot here at 23.90. Netflix, holding 500. That's about all you can say. I mean, the technical posture still remains bullish as long as 500 holds, but it's not holding by much. And you would have thought that on this impulsive move off the floor, that if the bulls had power, they would have taken this bull flag look and made it a run to at least 515. We haven't seen that happen. The bears have been able to contain price for the most part below 507.50, but they haven't been able to break 500 yet. So that's your pivot. If you lose 500, you're coming back to 492.50, and then if things get really soft, going to retrace all the way back to 485. Semiconductors, a lot of movement yesterday. A reach up to 253 where that failed, and then you got to move right back to 247.50 at the bottom of this prior gap. That's why I like to leave them on for a while, because like we say, those act as support and resistance levels. And so here it acted as support. Even though the gap had already been filled the day before, there's still muscle memory at that 247.50 area where it came back and found support. So today we just do a reset back to the same pivots that were yesterday. 250, I think you can be long. Below 250, I think you can be short and look for 247. And if 247.50 breaks, 244 would be your next target back where this support level was. So I think those are the right levels for you on semiconductors. I was looking through some charts yesterday. The auto parts segment has been really strong. I've got a couple charts for you here, but there are others within the sector that look strong as well. So don't take from these two charts that they're the only ones, but just for the sake of time, I wanted to show you a couple setups. This is Auto Live, back at the prior highs, trying to break out. I think you can put an alarm here for today, 107, 107.50, or if you even want to just take it off the open, if it's above 106, then you can set your stop below and then look for higher prices. You can see we've got a bull cross here on PPO, and RSI has remained strong the whole time, operating in its bullish regime above 50. So ALV looks strong, and if it can break out, it's got some blue sky to do some running if the group stays strong. This APTV, very much the same kind of look. Pullback from a high, back up to the prior high. Bulls want to see a breakout here above 157.50. If they can get that, they've got running room to the upside. Got a bull cross working on momentum, and RSI has moved back up above 50. So that's another one that you should have on your radar. And like I said, if you want to flip through the auto parts segment, there's quite a number of bullish looking charts. And if you're hunting for a long, I think it's a decent sector to look at. Other setups, our old friend JMIA. We have been watching this head and shoulders top. Got a breakdown below and a flash move all the way down to 1750, and it's made its way back up to the declining 50 and the 200. So the 50 I have is 31.77. If you get a break above the 50 and reclaim it, price will be above all the moving averages, and it'll be above this lateral resistance level. If you're interested, I think you can take a long there against, say, 31. You'll have all the moving averages below you as support, along with this technical level. I think that would be a very objective long there if JMIA can pop the 50. So I like that setup. KWEB, this is the basket of Chinese internet. And you can see the big downtrend that we've been in. And now we've broken above the downtrend, but still below the declining 50 and the declining 200. this has your Baba, your JD.com, your Baidu, your, trying to think of some other names. None are coming to mind right now. But all your big cap China names, China tech names are held within KWEB. What I'd like to see here is a move above 76 before you got long. Why? Well, you've got the declining EMAs here, which would act as resistance. And you've also got this large volume over price resistance level that may in fact pose a significant problem for price getting through. So I don't think you want to front run KWEB at all here. Set yourself an alarm at 76, and if price can pop that, then I think you got some real running room to the upside. But I don't think it warrants taking a position now. But that will be a really nice setup if and when it executes. And last chart, Triumph Group, TGI, breaking out, taking out the prior high, bull cross and momentum, RSI well above 50, heading in the right direction. This is in the aerospace group along with Boeing. In fact, they're a supplier to Boeing. So I think you can be long this name above 1950. And so if you're looking for a long, that one may fit the bill. So let's do a quick recap. Our oscillators are grinding higher. They're not up to overbought levels yet, but they need to be on the radar. So too the VIX. We bottomed out with a double bottom with bullish divergence. We're knocking on the door of first resistance at 18. Watch out like a hawk, because it breaks above 18, it's got running room to 20. And if that happens, you can be almost be assured that price is pulling back on the indexes. And then, of course, a break above 20, and we'll have a pullback on our hands for sure. Keep an eye on crypto, if only as a risk asset sentiment indicator. I think Bitcoin is really vulnerable here, below the 200 in key support. Let's watch that. And then, of course, we've got all our individual levels on the indexes and FATMAAN. I think there's going to be plenty there to keep us busy. And by all means, one last thought. Oil, up 1% this morning, on top of 2.5% yesterday. President Biden yesterday, I don't know if you heard, signed an executive order halting all leasing and pumping operations in the Alaskan wildlife refuge. So the politics of domestic energy roll on, right? Funneling money and energy into the wind and solar ESG sectors, and making it hard for domestic oil producers, not only on the capital side, but on the permitting side, to find more oil. So I think both on a macro level and a technical level, price is breaking out. And there's definitely a bid in oil. So I think you want exposure in that sector. Let's wrap it up here. This has been Chris Buss with Traders Profit Compass. Have a good trading day, and talk to you next time.